What's up, Jonathan? It's Guys here. Welcome back to the channel. Bank of America, everyone's favorite neighborhood bank, just released their implied inflation estimates between now and 2025. The inflation expectations released by Bank of America are between 5 and 6.5%. In this video, I'll talk about what Bank of America said and what they imply. I'll take a look at other projections that we can use as comparisons. I'll look at the market response and what it all means to you. Those 5 things we have to look forward to in this video. Now put yourself in this situation. You are a Bank of America employee. You earn $20 an hour today, and you are sitting in your break room. You get a notification on your phone. You see, oh look, I have a link to an article on my company's webpage. You go to the link, you see what they have to say, and they say, you're getting a raise, but in 2025. Why do you think you receive this raise, or you will receive this raise? Quick multiple choice question for all you at home. Please leave your answer down in the comment. Is it A, Bank of America has tremendous respect for all of its employees and values their contributions, therefore would like to raise their wages? B, Bank of America would like to generate some positive publicity because they know that sometimes they will receive negative publicity. Maybe it's C. Maybe it's what they haven't said. That there are some very smart people at Bank of America, and these very smart people are completely fine with the implied wage inflation rate that is conveyed in this $20 to $25 per hour wage increase for the coming 3.5 years. I'll give you 8 seconds. Leave your answer down below in the comments to let me know what you think. Alright, now that I've checked how cynical my audience is, please join me as we dig into the video. Let's jump into it. This CNN article on Bank of America cited Bank of America CEO as saying, costs us a few $100 million a year, but it's an investment. CSN also compares the future Bank of America minimum wage of $25 to the speculated federal minimum wage of $15 per hour. Bank of America will require all vendors to pay their employees a minimum of $15 per hour when they are doing business with Bank of America. Subcontractors will have standards that are almost as high as Bank of America. Pay for performance philosophy reinforces the company's core values and culture by inspiring employees to do great work, encouraging and retaining talent, and building trust within teams. Its efforts have been recognized by a number of external organizations, including LinkedIn and Fortune, as the only financial services company included in Fortune's Best Big Companies to Work For list for 3 consecutive years. Wow! That is a lot of self-praise. The question is raised, what will be the effect on other companies? We've already learned this question's already been raised. The CEOs of Goldman Sachs, JP Morgan, and Citigroup were asked this question by Senator Chris Van Hollen from Maryland. The CEOs liked to look into it, but made no promises. That's what's in the media. What's the market have to say about it? The market says we don't care. The share price of Bank of America is exactly where it was trading at close on May 18th. Bank of America is planning to raise their minimum wage 25%, $5 from 20 to 25 between now and 2025. At face value, this sounds excellent. Who wouldn't want a 25% wage increase? I would like to ask the question, what does that mean? What's behind that? And what can we learn from this $5 or 25% wage increase? First, let's take a look at what problem we have in front of us. We know the future price, $25 per hour. We know today's price, $20 per hour. What we don't know is what this implied discount rate is. Let's solve for that. We can use a formula that's generally related to futures. We can find out what the implied rate is between 2 values when we know how period in between. Periods in this case are years, and we'll say it's 3.5 years. We're going to say it's the middle of 2021. After plugging in all the math in my Excel spreadsheet, I have an interest rate of 6.58%. This is the implied wage inflation rate between now and 2025, according to the plans released by Bank of America. So this one piece of information doesn't really tell us a lot in a vacuum. Let's look at what we can find about other companies. Maybe other companies have ideas of what the wage inflation rate will look like. This first up, I looked at a list of large companies. Large companies generally have a lot of employees that may be earning minimum wage. Let's see what we can find about that. Looking through this list of large companies, I tested a few to see if I could find information about their minimum wage. I didn't find a lot, so I could not move further with this idea. Scratch that. In my second step, I took a look at the federal minimum wage. It's at $7.25 an hour. It's been there since 2009. Do you even remember what you were doing in 2009? Recent talk in Washington has been about raising the minimum wage to $15 per hour by 2025. If we say this $15 per hour federal minimum wage is the future price, and the current price, or the past price, is $7.25 an hour. We look at how many years are between 2025 and 2009, we come up with 16. We can use the same formula to discount this difference back and find out what their implied wage inflation rate is. Again, going to Excel, I find that the implied wage inflation rate is 4.64%. Comparing our two data points, we find that Bank of America is projecting a higher wage inflation rate, or at least preparing for a higher wage inflation than federal government is. As a third step, I wanted to look at what economists think. We have what the federal government thinks, we have what Bank of America thinks. Now let's find out what economists think. I looked at the official inflation numbers from the Federal Reserve. The Federal Reserve bases their numbers on the 10-year buy-in yield. They show that inflation has not been higher than 3% at all during the last 10 years. So what does it all mean? Bank of America maintains that their increased minimum wage is in line with their corporate culture and their valuing of employees. I interpret this wage increase as an implicit calculation of the implied inflation rate of wages. From what I see, 6.5% wage inflation would be very high compared with what the Federal Reserve says and what federal minimum wage says. Bank of America is almost certainly looking to get out in front of their competitors, looking at you, Goldman, looking at you, Citibank, looking at you, Morgan Stanley. Bank of America would like to generate positive publicity because it's only a matter of time before they get some negative press. From my question earlier, I would have to say all three answers are probably correct. Bank of America is too smart to not have taken into account wage inflation numbers. Bank of America is too smart to not have thought of this as a good publicity opportunity. And of course, Bank of America probably does have a culture that values their employees and values their contributions. My takeaway is that different entities interpret inflation differently. What Bank of America sees as the inflation rate, or what economists see as the inflation rate, or even lawmakers see as the inflation rate, or what they imply as the inflation rate, is different. I'm not sure who's right. What we can say is that there's a lot of different expectations out there, and we should be aware of them. What do you think? Do you think Bank of America ran all the models before releasing this press release? Before making this commitment to increase their wages? Feel free to let me know in the comments down below. Of course, my take is that Bank of America is a smart organization with a lot of smart people, and they definitely ran the numbers beforehand. If you made it this far, go ahead and pat yourself on the back. And activate that like button to show your support. See you all next time. Bye.